Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
Today's economic calendar is devoid of black star events, which allows us to focus on the technical analysis without worrying too much about the fundamentals. But before we dive into that, let's talk about something exciting. We're giving away a limited edition branded mug to one lucky subscriber. To participate, simply like this video and comment the answer to the following question. Which currency is also called the single currency? Is it A, the US dollar, B, the euro, or C, Bitcoin? Don't forget to subscribe to our channel to be eligible to win. The giveaway will take place once we reach 300 subscribers. T's and C's apply.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, traders are still waiting for the Federal Reserve to acknowledge an end to its hiking cycle, while trying to hedge the risk of a potential recession. Despite raising rates by 25 basis points last week, the Fed sounded slightly more cautious than its peers on the outlook and dropped guidance about the need for further hikes. Traders are looking for economic activity and data to support the idea of a recession in the US, whether in the second half of this year or in the final quarter. Strong US employment data continues to show strength and continued wage pressure, so it seems we keep putting off the inevitable, or the inevitable will never come as far as recession is concerned. Let's move on to our analysis on USDJPY. The Ninja is currently hovering just above the primary support. In the event of a close above 135.35, we could see an extended rally all the way back up to that resistance. However, in the event of a break below the support with a close at 133.65, this could trigger a decline back down to that previous support. Turning to Wall Street, market participants braced themselves for key inflation data set to be released during Wednesday's session, causing US indices to post a mixed session. Traders chose to remain on the sidelines ahead of the inflation data on concerns that it would come in hotter than expected, raising the chances of another Federal Reserve interest rate hike in June. Markets are already concerned that the Fed may have gone too far in its fight against inflation, and any further rate hikes will simply serve to increase the likelihood of a coming recession. Despite this, both the NASDAQ and the S&P 500 managed to hold on to gains through the close, with the former rising 0.2% and the latter edging up by less than 0.1%. Meanwhile, the Dow Industrials ended the session down 0.2%. Now let's shift our focus to the NASDAQ 100 analysis. The US Tech Index is currently hovering within the primary resistance, and a break above and a close at 13,320 could trigger a rally. However, a break below with a close at 13,230 could trigger a decline back down to the previous support. In commodity news, oil prices rose over 2% as US recession fears ease, and some traders saw crude's 3-week slide on demand worries as overdone. Brent crude settled up 2.3%, while WTI crude gained 2.6%. Oil rebounded on Monday, following energy stocks' comeback on Wall Street last Friday after the US reported strong jobs data, which eased concerns about an imminent economic recession. Alberta declared a state of emergency over the weekend in response to wildfires that displaced nearly 30,000 people and prompted energy producers to shut in at least 185,000 barrels of oil, equivalent per day, about 2% of Canada's output. Now let's look at the analysis on crude oil for today. WTI rallied all the way to that resistance yesterday as expected, and is now hovering just below the primary, horizontal and diagonal resistance levels. Should we remain here and get a close below $72.40 a barrel, we could see a decline back down to that previous support. However, a break of the resistance could trigger an extended rally. Lastly, let's talk about gold. Bullion prices have steadied above key levels, keeping to slim trading ranges as traders await more cues on the US economy from key inflation data due this week. while concerns over a banking crisis and a potential recession remain in play. The yellow metal saw a heavy dose of profit-taking on Friday, plummeting from near record highs as a stronger than expected labor market reported suggested that the Federal Reserve will remain hawkish for longer this year, although markets expect the bank to likely pause its rate hike cycle. Now let's have a look at the analysis on gold for today. The yellow metal is currently trading within a relatively tight range in the event of a break above the resistance with a close at 2034. This could trigger a fresh rally all the way back up to 2060. However, a break below 2020 could trigger a decline back down to that previous support.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.